So for more now on this bittersweet battle, we're joined by the most accurate analyst on the company, Simon Marshall-Lockyer, analyst at Jefferies International. Simon, thank you so much for coming here in the studio. Now, it is brewing and it's getting a little bit nasty, this war of words. Yesterday, Cadbury actually coming out and saying, well, guys, we're raising the profitability. Is this going to be enough for shareholders to stick with a company as an independent firm?
I think they've certainly raised the stakes for them to remain independent at this point. I think what really struck everybody yesterday was how clear and how straightforward the program is. I mean, you have to remember that in the last 3 quarters, every quarter we've had to raise our numbers. Every quarter, Cadbury has delivered well beyond expectations, particularly with the Vision into Action restructuring program, which effectively has been delivering ahead of the schedule. And that's why they're having to up their guidance. They've upped their guidance 3 times this year. We've had to up our numbers 3 times this year, generally in the market. And now the management, I thought, made a very credible case of the prospect beyond 2011, which is the current program's sort of target period of delivery, which is this 15% operating margin target by 2011, and now they're looking beyond that to 2013 for 16 to 18% operating margins, which would be similar to those that Hershey was generating only 3-4 years ago before it restructured. So I think the program they presented yesterday was very credible, particularly given the credibility of the management and what they've done over the last year.
Now, Simon, we're also hearing some press reports that Cadbury's workers are now beginning a campaign to fight this Kraft bid. Now, there's a lot of other names out there, Hershey, Ferrero Rocher.
Yes.
What are the credible bids that are likely to come up on the table?
Well, at Jefferies, we've been quite consistent. In the last couple of years, way before all this bid from Kraft materialized, and we don't cover Kraft actively as a firm currently, but already 2 years ago, we were viewing the optimal takeout situation for Cadbury to be a combination between Hershey and Nestle. Now, Hershey, of course, have announced that they are actually investigating officially this whole situation. Nestle are currently undeclared and have remained undeclared, so they're keeping their cards very close to their chest. The other party, of course, is the privately owned Ferrero Group, which is also investigating the whole situation. I think what one has to realize is that the stakes within the global confectionery industry are very high at this stage since the Master Foods Wrigley deal last year. We seem to be in one of the last, or at the last phase of the major concentration of this industry. Can any of these participants miss out on such a prized target as Cadbury? But beyond that, I do think that yesterday the management did a very strong job, just as a standalone business, to remain independent.
Simon, talk to me about what you're expecting for a price target, because if this is such a prized asset, how willing are they to possibly overpay for it?
Well, I think that without going into overpaying, I think it's worth 945 pence. So that is our estimate at Jefferies of what it's worth in a competitive bidding situation were there to be a second bidder to come around. We think this is worth 945 pence. Why? Because we're simply lining up the numbers with the other transactions we've seen over the last couple of years, and we get 945 pence.
Simon, thank you so much for that. Our thanks to Simon Marshall-Lockyer there of Jefferies with the latest on this Cadbury bid. Well, so